We're jumping straight into critical metals core today. Everyone is watching the price action, but the real story is the geopolitical tug-of-war playing out in Greenland.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And if you're looking for an edge, you are in the right place. Make sure you subscribe, hit that like button so you don't miss our next breakdown.
We're here to do the heavy lifting.
We are. We simplify all the complex numbers so you don't have to spend your weekend reading, these dense SEC filings. We do the work, you get the edge.
And today, I gotta say, requires some serious heavy lifting. This is a fascinating and, frankly, a very complicated story.
It really is. We are looking at critical metals core, and if you've been watching the chart, it has been an absolute roller coaster.
That's putting it mildly.
I mean, just look at late January. On January 23rd, the stock rallied nearly 21%.
In one day.
In one day. Then the very next day, January 24th, it tacks on another, 11.7%?
That is the kind of momentum that usually triggers the FOMO alarms for retail investors, right?
Totally.
They see those green candles, they see the volume spiking, and they just want it immediately.
Right. But then, reality checks in. Yesterday, February 4th, we saw a pullback of about 9%. As of today, February 5th, 2026, we're sitting at right around $13.26 a share.
Which is still way up.
Still way up. But here's the thing, and this is why we wanted to cover this specific company today. If you are just looking at the candles on the chart, you are missing the forest for the trees.
100%.
This isn't just about mining rocks. This is about the United States supply chain versus China.
And to really get a handle on why this stock is moving the way it is, you have to zoom out. You have to look at the macro picture.
Right.
You have to ask yourself, why are the Trump administration and the Kingdom of Saudi Arabia suddenly paying so much attention to this one company? Because, usually a junior miner with these kinds of financials wouldn't get a second look.
That is the billion-dollar question. So let's unpack the bull case first. Why are investors piling in despite all this volatility? Because on paper, the growth numbers look insane.
Insane is the right word, but context is everything here. We have to be really careful with percentages.
Well, okay, but look at the headline. Fiscal year 2025, their revenue is up over 376% year over year.
I know.
If you see that on a screener, you stop scrolling. You think you found a next Amazon.
You do, but I want to play the simplifier here for a second because that headline can be really deceptive. That 376% sounds incredible.
It is incredible.
But we have to look at the absolute numbers. We're talking about revenue in the, $560,000 range.
Okay, right. So we're not talking billions yet. This is not a Rio Tinto.
No, not even close. And it's important to realize that for a company at this stage, the development stage revenue isn't really the main scorecard. That $560,000, it just tells us they're moving from an idea to a business.
So they have something coming in.
They have something maybe from some smaller operations, but the main event, the reason people are buying this stock, that hasn't even started yet.
That's a fair point. But even if the revenue is small, you have to admit the discipline is impressive. Their net loss improved by nearly 63%.
Yeah, they cut it down to about $52 million.
For a pre-production miner, burning less cash while you're getting closer to actually digging stuff out of the ground, that is a huge signal.
It is. It shows management isn't just, setting money on fire, which is surprisingly common in this sector.
Right.
But let's be honest with everyone listening. People aren't buying critical metals because they saved a few million on G&A. They are buying the moat.
The Greenland asset. The Tanbreez project.
Tanbreez. It's a legendary name in the mining world. It's one of the largest undeveloped rare earth deposits on the entire planet.
And it's sitting right there in Greenland.
Right there.
We hear rare earths all the time, but let's clarify why Tanbreez matters more than a mine in, say, California or Australia.
Okay, so it comes down to geology. Not all rare earths are created equal. You have light rare earths and heavy rare earths. Tanbreez is incredibly rich in the heavy ones. Specifically things like dysprosium and terbium.
Dysprosium and terbium. Okay, why do we care about those two?
Because you cannot build the modern world without them. These are the critical ingredients for high-performance permanent magnets. You find them in EV motors, in wind turbines, and this is the key in missile guidance systems and fighter jets.
And right now, who controls that market?
China. It's almost entirely China. They control the mining and, more importantly, all of the processing.
So this is where the geopolitics comes crashing in.
Absolutely. The U.S. government is desperate I mean desperate, to get these heavy rare earths from somewhere outside of China. They do not want Beijing to have the keys to the F-35.
Precisely. And we're seeing money follow that policy now.
Mm-hmm.
Look at USA Rare Earth, one of their peers. They just got a $1.6 billion financing package.
A massive signal from the Trump administration.
It is. So critical metals is basically drafting off that tailwind. The market sees money flowing in and says, okay, who's next?
And critical metals not only has the goods, they have something else that shareholders love. Non-dilutive financing. They have a letter of interest for $120 million from the U.S. Exim Bank.
Let's pause on that term non-dilutive.
Oh.
We throw it around a lot, but explain why that is the magic word for someone listening right now holding 100 shares.
Sure. So usually when a small company needs $120 million, banks won't lend it to them. So what do? They print more stock.
They slice the pizza into smaller pieces.
That's the perfect analogy. If the company is a pizza and you own one slice and they double the share count to raise money, suddenly your slice is half the size.
You get watered down.
Or steak gets watered down. But with this Exim Bank financing, it's a loan backed by the U.S. government. They get the cash to build, but they don't have to print new shares. Your slice of the pizza stays the same size. That's the holy grail.
It's huge. And it's not just the U.S. government here. We have to talk about the Saudi connection. This was the catalyst for that big jump on January 24th.
Yeah, this is where the strategy gets really interesting. They have a 50-50 joint venture with a major Saudi partner.
A huge industrial conglomerate.
Massive. And here's the key detail for me. It is not just a partnership to build a processing factory. It's a customer relationship.
Explain that distinction. Why does that matter?
Because the Saudis aren't just saying, let's build this together and hope it works. They've committed to buying 25% of the offtake.
Offtake meaning the product.
It's just fancy industry speak for, we promise to buy the stuff you big up. So 25% of everything from Greenland is already sold before it even leaves the ground.
That locks in revenue. It de-risks the whole project.
Exactly. Bankers love it. And think about the logistics here. Mine in Greenland, shipped to Saudi Arabia for cheap processing, sell to America.
It creates a vertical supply chain that completely bypasses China.
It's a brilliant geopolitical play. But, and there is always a but on this show, we have to look at the ugly side.
The bear case.
We have to, because if you just listen to the story we told, it sounds like a slam dunk. But then you look at the balance sheet, and there are some numbers that should make you sweat.
You're talking about the liquidity ratios.
I am. The quick ratio and the current ratio are both sitting at 0.13.
0.13. That is, that's terrifying.
It is practically suffocating. Let's translate that. A healthy ratio is around 1.0, right? That means for every dollar of bills you have due right now, you have $1 in the bank to pay them.
And critical metals has 13 cents.
Effectively, yes. A 0.13 ratio means they do not have enough cash on hand right this second to pay their immediate bills. It is a liquidity squeeze.
So even though their long-term debt is low, their short-term cash flow is scary tight.
It creates a race against time. That's the fundamental risks. They need that Exim money to hit the bank account, or they need the Saudi deal to finalize. If those things get delayed,
they might have to raise cash the hard way.
By selling stock. And erasing all that non-dilutive magic we were just praising.
Which would crush the share price.
It would. So you're betting that management can walk this tightrope without falling.
And then there's the other side of that geopolitical sword. Greenland itself.
Geopolitics gives and geopolitics takes away.
Right. The U.S. wants these resources badly. But Greenland isn't just some warehouse. It has its own government, its own politics, and it's part of Denmark.
And the local politics there can be incredibly tricky. People might remember a few years ago, another rare earth project was blocked by the Greenland government over environmental concerns about uranium.
So is that a risk for Tanbreez? Because if the locals say no, it's game over.
Well, the good news for them is that Tanbreez is unique. It doesn't have that high uranium content. The waste rock is considered much cleaner, but you still have to deal with the local government, which is very environmentally focused.
So the CEO, Tony Sage, is basically playing 3D chess.
Yeah.
He has to keep the Trump administration happy, the EU happy, and the local Greenland government happy.
It is a very delicate balance. If any one of those three legs breaks, the whole thing stalls.
It's a high-wire act. And, frankly, the market seems a bit confused about how to price all this risk.
Oh, we're seeing a real divergence in sentiment. It's stark. If you look at older ratings on some platforms, there's a consensus sell still hanging around.
But then a recent analyst comes out with a strong buy and a $12 target, which the stock has already blown past.
Right, we're at 13 plus. It's a classic case of the market moving faster than the analysts. The sell ratings see that 0.13 liquidity ratio, and they run.
And the buyers.
The investors buying right now are betting on the story. They're betting on the U.S. Defense Department. They're basically saying the liquidity doesn't matter because Uncle Sam won't let this fail.
It's the narrative versus the fundamentals.
And speaking of who's buying, look at the institutional ownership. Over 86%.
That is massive for a company this size. Usually these are just retail plays.
Exactly. When you see 86% owned by institutions, it tells you the big funds, the ones who understand the political back channels, they are not selling. They're holding.
They see something the algorithms are missing. So let's look forward. What are the triggers for the next few months? What should we be watching for?
Well, the Holy Grail catalyst is coming up fast. Management has said they plan to finalize 100% of their offtake agreements by the end of this quarter.
Q1 2026. So in the next few weeks.
Think about what that means. If they sign those papers, if they can announce that every single rock is already sold, the revenue risk just, poof, disappears.
That would be rocket fuel.
That's the moment this goes from a speculative play to a secure business.
And they are targeting initial production at Tanbreez in 2026 as well.
Right. This is the year they stop being explorers and start being miners. That transition is usually where you see the biggest re-rating for a stock like this.
We also have earnings, March 18th, 2026.
I'll be watching that one closely. Not for the revenue, we know that's small, but for the commentary on their cash position.
Did the XAM money land?
Exactly. Did they fix the liquidity squeeze? That call is going to be crucial.
And of course, keep an eye on permits, any news on the Saudi facility, the Greenland pilot plan. Any of that stuff could move the stock.
It's boring until it isn't. One stamp of approval could be a 10% jump.
And the wild card is always U.S. policy. If we get an official announcement from the Defense Department about Greenland.
That's the game changer. If the Pentagon explicitly calls Tanbreez a strategic asset, the valuation models go out the window. It's not about cash flow anymore. It's about national security.
So let's bring it all home. What does this all mean for you listening right now?
It's a trade-off. It's always a trade-off.
You're buying a company with a genuinely scary balance sheet. That 0.13 ratio is not for the faint of heart. If things go wrong, they could go wrong fast.
But on the other hand, you're buying it because they have powerful friends. The U.S. government, the Saudi business elite, they are all incentivized to make this work.
And they have a unique asset you can't get anywhere else. You can't just print more dysprosium.
You really can't. You rarely find a setup where the downside is basically bankruptcy and the upside is national security asset. It is very binary.
It is. It's high stakes. And here's a thought I want to leave you with.
Okay, let's hear it.
Is Critical Metals actually a mining company anymore? Or has it become a defense contractor in disguise?
That's a really interesting way to frame it.
Think about it. Mining companies are cyclical. They boom and bust. But defense contractors, they get paid regardless of the economy. They get paid because the government needs them to exist.
So if the U.S. government views Tanbreez as essential, they won't let it fail over a bad quarter of cash flow. They'll backstop it.
Exactly. If it's a defense play, then you're looking at it through the wrong lens. You shouldn't be watching the price of rocks. You should be watching the defense budget.
That reframing changes the entire risk profile, doesn't it? It turns a risky small cap into a strategic hold.
It certainly does. And remember that institutional ownership, over 86%. The smart money seems to have already placed their bets on that defense narrative.
They are definitely positioned for the long haul.
So keep your eyes on the news. Watch for that offtake announcement in the next few weeks. It's going to be a wild Q1.
We'll be watching right there with you.
That's it for today. Thanks for tuning into the Easy Money Show. Keep your eyes on the news, and we'll catch you on the next move.